All right, welcome to CEO Money. I'm Michael Yorba. I've got Adam Rice, CEO of LoanConnect, on the show with me today. Adam, welcome to the show.
Thanks, Michael.
All right, you are going to talk to us about consumer loans, and also the state of alternative lending in Canada. You've got a new way to do things, so I want to hear about it.
Yeah. So we're a platform for unsecured loans up here in Canada, kind of like the lending tree of Canada, I would say. Really, the idea is to come out and fill one application, search multiple lenders in real time, and our job is really to connect you with the best lender. We plug into all of our lenders' adjudication systems for formal query of approval. And then basically have a system on the back end to kind of manage the loans as they go to different lenders.
Okay, all right. How about prime AltFi lenders?
Yeah. So here in Canada, the AltFi lenders have been kind of coming out of the woodwork a little more over the last few years. It's a little slower than it was in the U.S. I think we had a number of them come out with some bravado saying they're kind of going to change the way lending happens here in Canada with technology. And I think things didn't really turn out the way they wanted them to. So a lot of these guys said, come to us, everybody's going to apply and get approved really quick. The problem was that, for these AltFi lenders, they had to borrow funds in order to lend it out. So they were going after people with very, very high credit scores. But offering them loans at 13% at minimum, if not 19.9. So they had the technology side of things. They just didn't have the other end where they were able to give rates that people wanted. So they could approve tons of people, but they'd approve them, and then on the other side, they wouldn't take the loan. So we saw a lot of the AltFi lenders pivot. Some to be technology companies, others to be kind of more lead generating companies. And really, for the AltFi lending industry up until today in Canada, it's mainly been people with subprime or near prime credit that have been coming through and actually getting approved and taking the loans.
Okay. Do you want to talk about the future of lending? I'd like to hear more about that.
Yeah. So, it's been really exciting actually over the last 6 months because we've been able to see a lot of the banks, adapt technology that allows them to adjudicate instantaneously and approve and fund loans. So whereas a year ago when these AltFi lenders were trying to compete with rates that didn't work, now we have banks that have rates that people want who now have the technology in order to actually, have people take their loans. So for us, we're seeing kind of this movement away from subprime or near prime up into, kind of the prime market. And, I'd say we're a few years behind the U.S. in that regard, but, it's nice to see that the institutions, the main financial institutions are actually adapting technology that allows us to happen. And it's been great for us because, we're really that middle guy. We're kind of the introducer there. And we've been able to help a lot of credit unions here in Canada acquire new users. The banks are all keen to get new clients. Some banks give away iPads or other types of things to get new accounts. And, it's just really fun to start to see this traction, start to happen. I think a year ago we were thinking, we'd be seeing a lot more prime approvals, and now we're actually at a point where that's happening.
How did you get into this?
Yeah, so interestingly enough, I ran a company in China. It was kind of a real estate aggregation company. It aggregated multiple real estate listings into one source. And, I was back here doing an MBA in Canada, sitting in a dentist's office. And somebody in the room next to me was asking the dentist if they had a financing program available. And the dentist said, no, we don't have anything. And I kind of put on my aggregator hat. And I also was thinking, well, couldn't we provide a solution that allowed that person to finance whatever she wants, wherever she wants, regardless of whether there's an in-store program? And, that kind of evolved into, okay, well, let's create an online platform where people can at least search all these lenders. And now we're moving more towards the future of lending, which, in and of itself is, ultimately empowering consumers to go wherever they want and finance whatever they want through a network of lenders. So no need to have an in-store program. They could be a dentist's office. They could search loans from our network, and they could actually use a loan from one of our lenders to finance that purchase.
Brilliant. Now, I'm going to answer my own question, but I want you to answer it. How are you different than anybody else in your space?
Yeah, so we work with lenders. We're not a lender. We're never going to turn into a lender. I think, I can use the eBay analogy. eBay doesn't sell eBay stuff. They help other people sell their stuff, and that's really our job, right? Our job is to get lenders leads they can convert, and on the other end to help consumers access the rates that they deserve. Beyond that, we have a very, very wide scope of which we can improve individuals. So, people who have really excellent credit, we can get them rates at prime plus 1.5 through a bank, all the way down to, somebody on the deep end who's just coming out of a bankruptcy. But really what we're doing is, we're in the system itself, connecting people with loans and allowing them to shop that rate. But at point of sale, we're finally enabling people to, finance a purchase with a prime loan. Typical in-store financing programs start at 19.9, many of them at 29.9, and I think that's only appetizing to a certain subset of the market. Be they near prime or subprime. There never really has been a good solution for prime at point of sale where you see rates anywhere below 10%, and I think a lot of this is simply the same issue that we saw with the AltFi lenders. Here in Canada, they're borrowing money to lend it out. And when you're borrowing money to make it out, you've got to make some margin, and your rates have to be higher than 10. It just won't work on the other side. So now we've got this ecosystem of financial partners, banks, prime FIs who are keen to get new users, who are finally getting the technology that allows them to do the instant adjudication. So it's a really neat situation where actually now we can service prime people at very, very cheap rates and ultimately compete directly with credit cards. That's kind of the goal. So instead of putting it on your credit card at 15% or 19%, put it on a prime loan through a major FI at prime plus 2.
There you go. That's it. That is brilliant. This is going to take off like wildfire. Adam, thanks for being a guest on the show. Appreciate it.
Awesome. Thanks so much for having me.
You're welcome. Don't hang up after this. I'm going to talk to you offline.
Cheers.
All right. Welcome to. Thank you for joining us at CEO Money. I'm Michael Yorby, your host. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.